because it is. This is the top. So these were the various levels of long distant weekly breakout levels that occurred way back over here on 8:30. We were involved. That's in 2010. Here, how about this one? On 11/22 of 2010, they rocket to another high, as we had said. And it did with double diamond alerts, and it held that bottom teeny line. But then we had that 3-week breakout that started right there on 1/31 of 2011, right here. Double diamond weekly alert to the top, to that reversal down. Now here's the key. In the yearly formula, it's 3/4 delta down, and it's right here where this breakout top happened, and it's coming here now. Let's blow up this part of that weekly MMT, because here's the thing that's very important, is we're going to start with this bar right here, right now. This is 2723.29. That's what the bar is. Or I'm sorry, let me finally get it. It looks like it's 2723.29. And our closing price is 2715.61. Now, MMTs, it's going to be very important to understand on this weekly level what your shorter term market maker platform is going to tell you to do, because just remember, once again, public model. And you've already been told off this video who the big players are and who aren't. And the thing about it is, this is going to be a key bar, 27.23. And we close at 27.15. That's this weekly bar. You got to be above it. This weekly half bar right here is 27.86. And that was on 2/7 of 2011. That's when we were going up, making that top. Then finally and ultimately right here is 28.19. And we slid that bid with that gap down, and we called for the reversal right in here on our homepage of stockmarketfunding.com. Look under the S&P 500 indexes and all indexes and whatnot. You'll see the freaking dates. And we said that you had to retrace because we're in stage 1 of a reversal because we were so overbought, long overdue. And we finally got it. Here is the current weekly half bar right here. And that's 27.42. That was done on the time here is 3/7 of 2011, and today is 3/13/2011. I'm sorry, 3/13/2011. That's 6 days. Okay, so basically that 27.42 is going to be if we run up and we gap from 27.15. But let's say we run up and we hit that, and if we start to see another 3-minute, 3, 6, 9, 12 down, or a 15-minute negative ratio bar handle, then that means that it's slide to bid, and any call contracts would have to be executed during that triple witch options expiration. This is the most heavily sold off in the yearly delta from the beginning of January 2011, first trading day to current, is we know exactly where they're at. We don't look at the public stats. That's not where the indexes are. The indexes right now in that heavy technology and semiconductor area and other key Pacific areas within the Nasdaq component have slid the bid. And that they're not in the positive territory based on the SMF weekly market maker platform that transacts and deciphers the difference between that public weighted buyer and seller within the exchange model in Wall Street. Let's get that clear. And we have made it clear. And we know what has to transpire. We know that we have to take out this previous weekly bar at 27.42. We know that we have to close above it and consolidate to break up toward these other higher highs in this delta. So here's your delta. You were down 3/4 right here. It's called a double bottom. This is a 3-week breakout with the gap down to a 3-week market maker test. Either the public is moving it higher during the triple witch, or if we stay below 27.42, it will become a weekly bearish move still, because there's still weakness from the original gap down that would build, and we would make lower lows down here in the deltas. It is currently the most, from year to date, from the beginning cycle of the trend of the year and the last 3-week breakout here, it's the most oversold in my view that this Nasdaq comp is more oversold than the S&P 500. And we have to start out a new weekly and daily bar, a new daily bar, and a new intraday price action to the buy side to know that we're even going to go up here. And each one of these are 26.13 pennies per line right there. Let it be known. And that if you take 26, which is a one delta movement on the Nasdaq comp right here, if you take that number and add it to 27.15, well, guess what you're going to get to? 26 and 15 is about what, 41 or so, almost 42? Well, guess what the half bar is down here? MMTs, for crying out loud. It's 2742.12. So it's actually, if you take MMT, where that was closing in the weekly MMT market maker platform, you will know that a one delta movement will get you back to half of that weekly bar. And you know that if half of that weekly bar proves to come out price action resistance on a 3-minute, a 15, and a 60, you know that sliding the bid is coming right back into play. And that it's a weak ass move off the bottom. Once again, before they make lower lows, they can bounce back into these weekly half bars, and then if they're a rollover Beethoven, then the last delta downs and everything changes. Well, we look at how we break this whole weekly delta line right here. This was a 4-week 2 deltas up, 2 deltas down. Well, hell, 26 times 2 sounds like 52 and some change, $52 and within the price action volatility to me. Back down to this ridge here. And what it's going to take MMTs on a weekly level, and what's going to make those call options triple witch will show up. The futures market would gap, they would run higher, you would immediately run very quickly, which is a big advancement. But you're making it, you only got a delta movement to get to that 27.42 market maker price action bar that deciphers the human behavior and the psychological patterns that's within the Wall Street transactional tape. And either one side is going to be weaker or stronger. This platform will not be deceptive. We would know how to recalibrate on short sells, and we would also know how to let the winners run. And that's a NASDAQ gift on a weekly ass chart right along with the rest of them. And if it fails, we break lower. If we consolidate above it, we see what it's made to break higher, and the call contracts work well. The current market condition based on this index, the conclusionary report, is that we have hit a low. However, without that factual data occurring right here, that means that this reversal is still weak in play off of the bottom, and it was not a knife hook low on Friday to validate an index bottom. In either case, this is the factual data. MMT, NASDAQ weekly, triple witch options expiration. If you burn up there, then that means the call contracts will go higher. Priceline, Amazon, Netflix, CMG, Google, Apple, Baidu, all of these either get the put side comes into play or the call side comes into play based on what the current sell down reversal top of the NASDAQ comp 2011 triple witch starts on 3/14/2011. Trade management thereafter will be accordingly to directional price movement.